Good day to all. Today we're going to discuss about audit of the payroll and personnel cycle. Let's begin. Our first objective is to identify the accounts and transactions in the payroll and personnel cycle. So it is always like this. We begin with what accounts and what particular transactions are affected in such cycle. So let us just have a short discussion about overall objective in this audit, in which it is to evaluate whether the account balances affected by the cycle are fairly stated in accordance with applicable accounting standards or the International Financial Reporting Standards, or in the Philippines, the Philippine Financial Reporting Standards, or IFRSs or PFRSs respectively. And then let us just have a review also of the accounts that are affected. So we have the most liquid asset, which is cash in bank, for the payment for salaries and for payroll taxes. Salaries for payroll as well as the payroll taxes, which are basically the withholding taxes for the income taxes to be remitted to Bureau of Internal Revenue in the Philippines, of course. IRS, Internal Revenue Services for US. Then in addition to that, we also have to know that salaries, if not paid within one accounting period, will have to be accrued. So we have here the accrued wages, salaries, bonuses, and commissions. So to compute using the T account, we have the beginning balance, and then we add the earned wages and salaries, then deduct payment, and we get the ending balance of that. For the accrual of such salaries as well as other remuneration or benefits for the payroll, we just have to take note that they can come from direct labor, of course, for the payroll specific for the production, while all other items for the payment of salaries and other benefits will go to expenses, salaries expense and general administrative expense. However, for this one or this chapter, because we focus with payroll, so we expect that only the direct labor will be affected in this case. Then if cash in bank will be credited in terms of withholding, the debit, of course, will be for the withholding income taxes or other deductions which will have to be paid. Then payroll withholding also will be credited in case that there will be payable. For the tax expense for the payroll, that would be for debit for the said, since this is a liability, so for payment, such should be debited and then credited with cash in bank. For the payroll tax expense, that would be a debit or an increase, while that would be a credit to the accrual. So these are the accounts that would be affected in the payroll and personnel cycle. Then in most systems, the accrued wages and salaries account is used only at the end of the accounting or of an accounting period, because these are the wages and salaries which would be unpaid or which are unpaid at the end of the accounting period or cut-off period. Second would be the business functions and the related documents and records in the payroll and personnel cycle. So this is the cycle, and this is how do we simplify things here. We have the payroll and personnel cycle. It begins with the hiring, and then this ends with the payment of the corresponding benefits, remuneration, salaries, and others. Then human resources would be the department in charge with keeping of the records, most especially with the files involving the qualifications of the employees or the staff or personnel, as well as the rates, for example, or salaries applicable. Then we also have the deduction authorization form in case that there would be some deductions to be made out of the payroll and salaries, and the rate authorization form for each specific employee, most especially if we have various rates for every employee. Then in terms of payroll preparation, we have to keep the time. So these are the documents that will have to be prepared to keep the time or to have records as to the time, because this would be the basis of the computation of payroll or salaries. So if we talk about production workers, normally the salaries to be paid will be based on the time that they consumed actually in the production of said goods or services. For example, for a service concerned business. For manufacturing, normally we think of goods. So we have here the time record, which would show the specific time, as well as the job time ticket, specific time, specific to the job, payroll transaction file for all items in the payroll names of the corresponding employees, as well as the payments and the payroll journal for the transactions recorded. Then the payroll master file, as what I've said, will be the basis for the recording of payroll transactions. And then this would show each employee, again, the details of the employee, and then the total employees' wages paid for the year to date, or wages of the employees which are paid total for the year. Then payment of payroll will be normally done through ATM in today's world. So we have the automated teller machine. So we will just have to transfer the company's coffers of money to the separate bank accounts of the employees, evidenced or as having the payroll in the form of ATM. And then in the old times, we have, of course, that check. But prior to that, so older to that, we have cash enclosed in envelopes. So those are the situations prior to today's generation. But in today's world, well, we already have our ATM, again, as an evidence of the bank account for each employee. Then we also have to make sure that all our payments for the payroll are reconciled with the payroll bank account. So for big companies or corporations, normally they have separate bank account really intended for payroll, which is separate from bank accounts which are intended for disbursements. It's possible though that payroll is mixed with a disbursement or disbursing bank account or accounts. Then for the tax returns and payment of taxes, this is with US, but then in the Philippines, well, we have our forms for withholding, and then we have to prepare also the income tax returns for withholding as well as for the annual. Then we go to our tax subjects for such. Number three, understand internal control and design and perform tests of controls and substantive tests of transactions for the payroll and personnel cycle. So similar with the other cycles. To do such, we have to understand first the internal controls present, whatever step, process, procedure, or framework or convention or anything that is intended to have effectiveness and efficiency of operations of the business or client, but primarily also for the fairness and reliability of financial reporting, as well as the other objectives under the COSO framework. Then second would be to assess plan control risk. So we have to know how risky the payroll and personnel systems there are for a business or client. Also, with the internal controls present, we have to test them, but we have to determine the extent. So will it be more extensive or less extensive? Then we also design the test of controls further and the STOT or substantive test of transactions for payroll and personnel to meet our transaction related objectives. So we have to remember our transaction related audit objectives starting from or with occurrence down to the last would be our cutoff, as well as other management assertions or representations. So we have also to remember that our audit procedures could be changed depending on the risks involved, as well as the sample size, items to select, and timing. So bottom line, the riskier a certain account is, the more procedures, the larger the sample size, more items to select, and the more that we are going to get close to balance sheet date or end of the reporting period. Then we also have to understand internal control. How do we do that? Or what are the things that we have to take note? So there should be adequate separation of duties, especially the acronym CARE, custody, authorization, recording, and execution. Authorization, we have to make sure that the person that authorizes the payroll or any payment of salaries really has the authorization for such or is authorized for such. Accounting should be in charge with documentation and records, while the physical control over the cash, which would normally be the source for payment of salaries or cash in bank, should be separate from those who have authorized the transactions and those who maintain the records. And there should be check and balance, which is a principle under the government that should be maintained. So there should be reconciliation of the records as well as the actual balance of cash, most especially if the company maintains a separate bank account for payroll. But if it's not, then the more challenging it is, I would say, for determining if ever there has been balance. But we can see that under our bank statement anyway, or even the online version of the bank accounts. So as what I've said also a while ago, that there would be payroll tax forms as well as payments that will have to be made. So normally we pay the payroll taxes withheld or other withholdings applicable, but normally for salaries, we have our withholding taxes for income taxes out of the salaries. So such should be paid at least monthly, or it depends upon the company as to how do they do that. But overall, it should be at least monthly. Then inventory and fraudulent payroll transactions. It's really possible that there would be fraud that can occur or happen in the company because it's possible that there would be fictitious or non-existent employees that will be part of the payroll. So that would be one item that the auditor will have to look into in the list if such employees really are still employed by the company or having affairs in the company as of the moment. And also we have to check the payroll valuation, so the amount of the payroll, as well as the actual inventories or list of the employees. Then the methodology for the payroll liabilities, we begin with having the understanding with our clients. So business risks, which are the risks that the business would fail to achieve the objectives in relation to payroll liability accounts. That's phase one. Next, we have to set our tolerable misstatement or performance materiality, in which that's the level that we will allow ourselves to pass on the value or amount of the liabilities for payroll. And we would say that any item below to that, for example, with that threshold or performance materiality level or the level of tolerable misstatement would be immaterial. So anything that is equal to that or above would be material. And then that's still phase one. Also, we have to assess the control risk. So this has been mentioned under methodologies anyway for overall framework. Then again, the test of controls and the substantive test of transactions, or TOC and STOT. That's phase two. Then we have already mentioned these items as well. For design four, we perform also analytical procedures or the ratios in the payroll and personnel cycle. For example, if we compare payroll expense that we have with previous years, it's possible that there would be misstatements, most especially if there has been no change or changes in terms of number of employees. Although it's possible that because of increases during the year, or there could be changes with the number of employees or any other reasons like retirement, for example, or resignation. So that would have impact on the balances. But then if, let's just say, the amounts are not that big, so that's okay. And again, we set a level of tolerable misstatement or performance materiality. Then we compare direct labor as a percentage of sales. It's possible that there would be misstatements or there would be material misstatements on the direct labor as to the amount as well as the cost of the inventory, because remember, we have to take note that direct labor is a component of the cost of the inventories of the company. Then what about for commission expense as percentage of sales? For example, if we have agents in the company, they will have to be paid with commissions. And normally commissions are stated as a flat percentage of sales or gross sales. So in that case, we would be able to check if there has been misstatement in the computations of commission expense as well as the liability or the accrual. For payroll taxes as percentage of the salaries and wages, so we would also be able to check the expense and liability respectively. For the accrued payroll tax accounts, also misstatement of the expense and the liability. If you can notice for these three items, it's on the accrual aspect, or they are on the accrual aspect. Next, fifth objective, we design or perform test of details of balances for accounts in the payroll and personnel cycle. So in this particular case, there are two major balance related objectives that we have to take note. And then they are shown here as number one, accruals in the trial balance are stated at the correct amounts. So this is on the accuracy transaction related audit objective. And then also the cutoff, they are recorded in the correct accounting period. Also, we have to take note for the details as to how the balances or the balances of these particular accounts have been computed. As what I've said a while ago, more or less, we are talking about the accruals, the withholding taxes payable or the accounts withheld for the withholding taxes in terms of the employees' payments or salaries, then the accruals for salaries and wages, if unpaid, as well as the unpaid commissions, bonuses, the pays, the other benefits of the employees, so vacation, sick pays, and then for the payroll taxes. Then these payroll taxes accrual would of course be closely related with the withholding taxes because essentially they're the same. Then, in addition to that, also with the expense accounts of the accruals. Remember, for accruals, we will debit the expenses and credit the corresponding liabilities from officers' compensation or their salaries and other remuneration or benefits, commissions, the payroll tax expense, the total payroll or salaries, and the payment for the direct labor or contract labor. Then we also have to make sure that we follow the presentation and disclosure objectives. Although the required disclosures would not be that extensive, normally we just have to disclose the necessary details as to how we computed the balances of the accounts. Although some complex or complicated transactions require footnote disclosure. So aside from showing the values on the financial statements, we really have to disclose corresponding details as to the amounts, for example, remuneration of the company's officers. Normally they have really material amounts of salaries, so such should be disclosed also on the financial statements as well as in the notes. So face plus disclosure in the notes. Then these are the types of audit tests for the payroll and personnel cycle. Gladly for this particular discussion, we only have one slide. So these are the three T accounts that are affected normally. So cash and bank will be affected by the payments for payroll liabilities as well as for direct labor and payroll expenses. So that would be a credit to cash and bank and then debit to both payroll liabilities and the expenses. For these accounts, they will be audited, of course, with corresponding procedures as well as the transaction-related objectives. And then, to be more specific, audited by test of control, substantive test of transactions, and analytical procedures. For the ending balances, we perform or check or audit such using AP and, in addition to that, the test of details of balances. Overall, if we are able to achieve the four, so we would be able to get, or we would be getting the persuasive type of evidences. To be persuasive, such should be sufficient and appropriate. So sufficient would be on the quantity, while appropriate would be on the quality. All right, so thank you very much for listening. Thank you very much once again, and God bless us all. See you in the next series.